All right, let's work through this example. You're also welcome to pause the video and try working through it on your own. So long as you have your formula that we just went through, straight line couldn't be simpler, right? So go back to your formula. Feel free to try working through the expense calculation on your own. All right, so here is our data, nicely organized there for us. Let's put it into our formula for straight line. Okay, cost minus salvage value over life. Okay, here they give us the purchase price and there's some sales tax. We remember from a few videos ago that we have to include all those costs. All right, so 42,000 is your cost. Salvage value needs to be given. There it is, 9,000. Useful life has to be given to you. There it is, 4 years. Oops. Right, solve for what you get there. Remember, that is your annual depreciation expense, your expense per year. You should get 8,250 per year. So if we were asked to then not just do the calculation, but to do the journal entry, right? Our journal entry at December 31st, 2020, because we bought it January 1st, would be to debit depreciation expense, credit accumulated depreciation for the 8,250. To record depreciation expense. Okay, doesn't matter which method we use, your journal entry is always the same. Debit depreciation expense, credit accumulated depreciation. Nice. The nice thing about straight line, it's easy to calculate. It normally produces the same depreciation expense each year. The same depreciation expense each year. Another fun fact, majority of companies, about 85% of companies, use this method. Okay. Now you'll notice in the second bullet point there, I said that it normally produces the same depreciation expense each year. Here's a time when that may not be the case. Let's say we did not buy it on January 1st. Let's say we bought it on March 1st. Okay, if that's the case, we have to calculate a partial year of depreciation expense. Still not too bad, right? You know what it is per year. We could then divide that by 12 months to find out our depreciation expense per month. Okay, 8,250 divided by 12 gives us 687.50. Then multiply it by how many months we owned the asset in the year. So I guess that's 10 months, right? If we bought it on March 1st, all of March, April, May, yada, yada. So that would be your depreciation expense for 2020. Same accounts, right? 6875, 6875. Now let's say we record it next year for 2021. Assuming we had it all year, your journal entry would be for the full year amount, 8,250, 8,250. So that's why I said it normally produces the same expense every year. The only reason why it wouldn't would be in that year of purchase if you bought it not on January 1st, right? And the reason it's called the straight line method is because if you were to plot it, again, assuming that we bought it on January 1st in 2020, 2020, 2021, 2022, etc., it would be 8,250 each year. So if you were to plot it, it would be a straight line. The only reason why it might not be, again, is if you didn't buy it on January 1st. All right, that's the straight line method. Okay, easy to calculate. Normally it'll produce the same amount each year, and the majority of companies use that method. In the next example, we will look at the second method, the units of activity.